Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After carving a series of higher highs and lows for 3 consecutive days, the Australian dollar was a little bit mixed as fresh supply returned. Nevertheless, it's fallen back into a consolidating pattern that could eventually see a rise on towards the target of 62.60, which presently needs to be broken to support the next rally on to 63.10 and reassess. As above there, the market will be looking at the 60-day moving average, seen around 64 cents. Meanwhile, President-elect Donald Trump will return to the White House on Monday, officially becoming the 47th President of the United States. Inauguration Day will feature a formal swearing ceremony, musical performance, a parade, and various formal balls. On the economic front, though, weekly US jobs claims and monthly retail sales data came in as expected, with investors now closely monitoring these figures for insights that could influence the Federal Reserve's interest rate decision in the coming months. The report suggests that the US economy isn't heading into a recession, but may be showing signs of slowing, which could help alleviate inflationary pressures. Any pullback likely to find demand around the 61.85 area. Over the last 48 hours, the euro has maintained a soft stance, but still holding relatively well, considering the technical pattern that does support a bullish case, and therefore look on towards the region of 103.60 as a potential target. The dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped to 108.78 in New York. Any pullback likely to find support around 102.40. Two heavy candles that suggest further weakness for dollar yen, and that is towards a target of 153.3065, given the fact the break of 156.70.75 just recently. Any upside attempts, well, we shouldn't rule that out, but finding resistance around the area of 156.15. But overall, with the trend coming into play to a bearish case, weak technicals should support the downside case, as I mentioned, to 153.3065. Turning to sterling, the market has formed another doji, adding to a rare series of 4 consecutive doji candles, signaling strong market indecision. Historically, such a pattern often leads to a sharp reversal of the prevailing trend, which we can see here was bearish. The 4-price doji comes in all different shapes and sizes and is a rare candlestick, as mentioned, characterized by the open, close, high and low being equal in value or nearly identical. If this is the case that the bullishness is coming back into play, then the top side target looks towards a region of 123, figure 25, or where this downtrend comes into play, somewhere around 124, figure 50. Overall, though, the technicals are supporting a potential bull run, so let's see if the market does rally on, with any weakness finding support around 121.85. As the market still cheers for commodities, the spot gold price is sitting comfortably above 2,700 and has potential to break out of this band, which goes back towards the early November last year and maybe on towards the region of 2,730 to 34, or even up towards 2,750. In the market, there is much discussion of a potential target around 3,000 in 2025. So therefore, bargain hunters are not likely to miss out if we get any pullback around 2,600 to 70 to 90 area. Overall, though, the market bulls are likely to keep this in play, given the fact the ADX is relatively strong. Having broken above $78 a barrel, the market is finding a little bit of difficulty up here, and with supply coming back into play, now looks towards the support level seen at 76.70.90. A break there would give further scope to the downside and bring in a target around $74 a barrel, which is in favour due to the fact that the ADX is overheated. We did have bearish divergence, but that's broken down, and the RSI is looking somewhat heavy. So let's see if the market can take the challenge towards 76.70, with the resistance now seen around $78.50 to $79 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.